There's a really good reason I give my traders heads up about the jobs data that comes out the first Friday of every month because of the volatility that may ensue, and today was no exception. So here we are on Friday, October 6, 2023. The September jobs data came in way hotter than expected, and what I want to focus on here is not the 300,000 plus jobs that were created, but this little 3-minute chart of the E-mini S&P 500 futures. I want to walk through it from the moment the news came out to everything that unfolded and just show you how, even though, yes, it's the economy and the fundamentals and all that are driving the market, the technicals are what can help you recognize those turns and take advantage of them if you so choose to trade that day. So if you're new here, I'm Hema Reddy, and I use price, time, and momentum to boost my trading and that of my tribes. So let's just take a quick walk, all right, through this chart. And what I'm going to do is start with the big old drop we had coming in to the jobs data. So there it is, okay? So the jobs data released, so by the first completion of a 3-minute bar after that time, so the data comes out 8:30 Eastern, so this bar is 8:33 Eastern, you can see huge push lower, all right? And I'm just gonna make these candles a little fatter for us to see, but look at how the market fell again, recovered briefly. RSI power zones, my favorite momentum indicator, became way oversold, even beneath the bear support power zone. But then look at what they did. They started to show a bull-bear RSI face-off, and again, the location of the pattern means a lot relative to what might happen and what you should be doing with your trading. So if you by any chance had a short position on here, this was your first warning to perhaps cover that position. Here's what happened from there. Unfolded higher, came back to retest this high at 4261.5. So I'm just going to throw a little anchor down and then blasted through it. So after trading above that level, you may have wanted to look for a pullback opportunity. Did we get one? Let's see. Well, the first thing is that the price action came all the way up back towards the bear resistance power zone. And if you look simply at the colors of the candles, those of you who follow my Gann techniques and know the directional price drives, look at how we had 1, 2, 3 drives higher so far, right? I'm unfolding this as if it was happening in front of our eyes just to bring you back to the moment. And check it out. Shooting star candlestick, I talk about the Gann candle implications. A retest of that, and then another candlestick. And in this situation, we saw a cap in the bear resistance power zone. This provided an opportunity for a pullback, for a little breather on this up move, and it came back to one of my favorite support levels, which is 50% of the prior move. I get into that a lot in my Gann book. Held that support, came back and retested this price high, pushed lower again. So this is all a correctional move. And there were forecasts that could be deployed here. Very short-term ones, but forecasts still. So I've come and snuck in those forecasts. And these little intersections here in blue, guys, those are 2 different forecasts showing areas to potentially buy into futures. Or if you were short from here, cover your positions. And check it out. Those provided some short-term stops, but yet the market kept going lower still until it finally came back, tested the bull support power zone one more time, and check it out. This was a 3-drive move lower. Then it started to regroup. Then we started to see a return above 4267.25 and really took off from there. But all of this here from 9:30 a.m. to about 10:25 a.m. was a regrouping in the bull support power zone on the 3-minute chart. So again, if you choose to trade such a volatile type of price action on a volatile news day, I'm just showing how the technicals still play out. Came up, gave us a big move higher. Let's see if there was a forecast to pair with that. And check it out. This pink intersection of time and price was a magnet pulling price up and to the right, and it could have been calculated as early as 10:15. Would have been helpful to know at 10:15 a.m. Eastern that this market might be trading up to this price level into this time of 10:51? Absolutely. And then it gave a brief pullback and continued higher from there. You could have continued to deploy forecasting, momentum, and other analysis on here and ride this wave. Came up into noon and then settled down for a bit before slowing its pace but still going higher in the afternoon. So I just wanted to show you all of the instances here where, especially early in the day, guys, that action was definitely unfolding per usual technical patterns, but it was fueled by the market digesting this very surprising news. So there's no law that says you have to trade on the big market moving days. You can go for the steady ones in between and leave these days alone. If you do choose to trade on days like non-farm payroll, be careful. There'll be wide swings in there. And remember that your techniques and setups that you're learning through the HEMA Ready trifecta can still work. Just got to protect your trades as always, watch that risk management, and deploy and see what the market gives you as your potential profit. Catch you next time.